on Friday. Let's bring in Adam Johnson, founder and author of Bullseye Brief. I don't know, Adam, if I've got it in me. I'm already tired. This is a mega week. Sort of every single thing I mentioned could be make or break for the markets. Maybe let's go in chronological order. We're going to be getting these big cap tech stocks. Do you think Tesla's big pop is a harbinger of how investors are feeling about trading these stocks?
Well, you could argue that Tesla is a risk-on barometer, but Tesla's kind of in its own unique category. There's no other company like it, and there's certainly no one else like Elon Musk. You talk about, Amber, all the different things that are going to be happening this week, from earnings to data to, oh yeah, an election. Imagine that. And yet, I think there's a lot more to like than to fear, Amber. I mean, think about the economy. GDP is growing over 3%. Think about earnings. They have been rising 8 to 10%. This earnings season, they may be more like mid-single digits, but if you look at the forecast, you're into double-digit growth going into year end. So the economy is strong, earnings are strong. Meanwhile, inflation's come down to somewhere around 2.2 or 2.3%. If you average all the inflation indicators. On top of that, you've got the Fed lowering interest rates. Commodities are not running away, which is good. I mean, in spite of all the wars we're seeing around the world and hostilities and tensions, oil, at least here in the U.S., under $70 again. So there's a lot more to like than to fear. And while there are plenty of things that can kind of skew markets one way or the other over the next week or so, I think markets and people like me, long-term investors, are looking past all the short-term noise and embracing what is arguably a pretty good picture.
All right. So how are you expressing that? Do you want to stick with the tech trade? Are you a believer in the rotation?
Oh, yeah. No, I'm not a believer in the rotation, but I am a believer in tech. You talk about rotation, and there's this conversation happening on Wall Street and really, on trading floors and in boardrooms around the world where people say, gosh, tech has had such a great run. The Magnificent Seven doing so well. Should we sell some of those names and rotate into some of the laggards, like small caps, which tend to start to perform better as rates come down? And yeah, you can do that. But, I'm inclined to just stay with what's working. As I look at my own portfolio, look, as you know, Amber, I run the American Ingenuity portfolio. So I'm someone who's going to want to own those stocks in the first place. I call them core ingenuity, the Magnificent Seven. I think you got to own them. Semiconductors, given the demand for AI, I think you got to have a large allocation to semis. I do. About 18% of my capital on behalf of investors is committed to semiconductors in various forms. So I think you actually have to just own some of these sectors. And while there may be some rotation opportunities for tactical investors, I'm focused on what's happening over the next 2 years. And what I think is happening over the next 2 years is that we're going to see continued growth. We are going to see more money come back into the markets that is still sitting on the sidelines. There's still over $6 trillion sitting on the sidelines. That money's got to get back to work. And I think the election results, whatever happens, will catalyze some of that money to come back in because it removes uncertainty. And then you just embrace the AI trend. I don't mean to sound like a Pollyanna or that everything's great. No, nothing's ever great. Nothing's ever clear cut. But again, there's a lot more to like than to fear.
Well, that's reflected in the markets, too. They've been glass half full for quite a while. There is some nervousness in some of that group, though, going into earnings. I'm thinking Apple, was just downgraded last week by an analyst. I know that's not consensus, but concern, right, about what are the numbers going to show? Are they going to be able to get back to growth? Even Microsoft, there was a downgrade a couple of weeks ago of Microsoft going into earnings. Those two kind of strike me as the which way is this going to go when they report earnings? How do you think about those two in particular?
I honestly, Amber, really don't look at quarterly earnings. I mean, again, I know you're going to say, oh, wow, Adam really is a Pollyanna drinking the Kool-Aid. But think about, how you run your family. Imagine if you sat down with your kids and you said, okay, kids, let's discuss the past 12 weeks. What have we done well? What have we not done well? And now let's focus on the next 12 weeks. Are you going to go for some A's? Because, there were a couple of A minuses and B pluses. I think we need to try harder these next 12 weeks. In fact, let's lay out a special task force to identify the key moments that you're going to have with your teachers for tests, right? I mean, that's an absurd conversation. And yet somehow that's what Wall Street expects of corporate America. every 12 weeks, and you get through it, and then you got to repeat it all over again. And I think we've just gotten obsessed, actually, with guidance and with hand-holding. I mean, think of, on Fed Day, we question the Fed chair on all the subtleties. Well, what would it take for you to cut 50 basis points? And what data points you're looking at? I mean, I don't know. It seems contrived to me. I think what is the most productive way for me to spend my time, Amber, is to identify companies where I think there's a pathway for earnings to rise double digits over the next 2 years, and where there's also, as a result, a pathway for valuation to expand and for stocks to double or triple over the next 2 years. That's how I spend my time. It's not on trying to game earnings over the next 12 weeks and what guidance is going to be. But I may be the exception to the rule because there are a lot of people who are looking at every earnings report.